Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour, where we come to you at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So, what do we have going on today? Well, it's Delta Neutral Day for options. This is a quad witching expiration on the 16th. Of course, the 13th and the 14th are Fed meeting days, with that Wednesday afternoon being the Fed announcement. The question is how many people, I think, want to get in front of that Fed. Why a lot of people continue to try to talk up what he says. My thoughts are that many people on Wall Street are trying to hold the market up while they sell into it, otherwise known as distribution. I don't see a lot of signs that there's anything else. Many people all think that, we're gonna see that maybe mid next year the recession will really come. Maybe that. It kind of reminds me of Warren Buffett, who says that the stock market are a bunch of people who all think that they're Cinderella. They're in there. They know that everything is going to. What is it? The thing that turns into a pumpkin. Carriage? Yeah, I think it was the carriage that was going to turn into a pumpkin, and it had 6 mice pulling it, but they were horses, and it was a nice carriage. Anyway, everybody thought, or she knew, that at midnight everything was going to go to hell in a handbasket. Warren Buffett says that, it's like that. Everybody thinks they're Cinderella, except there's no clocks on the wall to tell you when midnight comes. And generally, when everybody tells you that everything's bad going to happen next year, I think everybody already knows it. So, one, it's not going to happen. Or two, it's going to happen a lot sooner than you think. Anyway, I suspect a lot of people are wanting to get out, exit stage left to Murgatroyd before it all happens. And meanwhile, there's going to be a lot of happy talk. Now, on today, one of the things I saw way back, I want to say mid-2000s, and I want to say it was Stocks and Commodities. It may have been in another magazine at the time before everything was on the internet, which I think is just a fad, by the way. Eventually, everybody will figure it out. Just a fad, just passing fad. Anyway, they've got they did a study and found out that on options expiration day and on Delta Neutral Day, there was about 50% more upgrades and downgrades. And I always thought that was, than just the average regular bear would see going into hibernation. Why would you see a bounce of upgrades and downgrades on 2 days of each year? That is the third Friday of the month and the Wednesday before, the week before that. And, if you haven't read it, there's probably the single biggest book that anybody has ever recommended for traders. And I would say that if I haven't gone through it 5 times a year, I'm lying. And I'm going to say that if I haven't gone through it 500 times since 2000, I'm probably lying. There isn't a day when something doesn't remind me of something in reminiscence of a stock operator. Now, is he always right? No. Or does it always apply to you? No. But I always thought it was very interesting to find all that stuff. But besides most people on Wall Street and politicians being plain suckers, there is this kind of idea where how would you see just 2 days with a outstanding preponderance for upgrades and downgrades? And the answer is that they're trying to kind of move around the price for either expiration and or moving it around to hedge out positions. So it's not uncommon. I saw a few today, and I forget what I was watching. I was actually tuning across the channel, and some were asking, well, does this make any sense? And they said no. They're probably long the stock, and I think it was bookings.com. Then why is it down for the year? Why is this? Why is that? And I thought, well, that's a kind of an interesting question, although everything's kind of down. So the question is it down worse than the rest of the market? I think it would be a much better question. And it wasn't, I don't think. Wasn't that much different than the rest of the market, at least for the stock that they were talking about. Anyway, my whole point in this is not uncommon to see a lot of people pushing and pulling, not because they believe anything, and mostly just because they need to get in and out of position. So you generally have wide swings on this day. We do not have them. That's fairly narrow. That is telling me that there may be some other bigger things going on. I do think that we're probably going to see people continue to sell into that Fed meeting next week. We also have the jobs numbers on Fridays, or some more numbers. But my thinking is that everybody's tried to flood the market with a lot of happy talk about how the Fed's not going to do anything. He's not going to be the Grinch that stole Christmas. But here we are 7 days in to the month already, and it don't look good. This is not the kind of Christmas rally that you normally see. We saw them push the market up on the day before fund buying started, pretty much, or right then. And the old saying in advertising is, we'll put it up the flagpole in Peoria and see if anybody salutes. I don't know if anybody remembers that saying. I think you got to be pretty old. But I think that was kind of the old introduction to advertising. I think it may have even been in high school that I learned about that. But anyway, they put it up the flagpole. Nobody saluted. Market retreated. So the question is, what would be different than last Wednesday when they ran that up? They ran all the shorts, and then nobody decided to show up for the parties after that. They just kind of held it up. It is kind of sold off. I don't see much changing out there. Does that mean that we're going to hell in a handbasket before the end of the year? No. But it really smacks of everything that I've seen, which is that we're probably going to have an incredibly hard time seeing higher prices. Now, when would we get probably higher prices? I think if you can make some kind of significant low into the week of the 16th, and everybody gets washed out, and everybody gets short, volume's going to shrink into Christmas. Maybe you get kind of the same kind of thing that led up into that pop last Wednesday. And that is just too many people short, volume's too light, and then you pop back up. And again, you can be short, but you either need to be picking your battles very carefully and being short for only a little bit of time, maybe a week or two at a time, because the market continues to go higher for the other 3/4 of the time. So it's problematic of being a bear unless you have decided to sit on your hands and sit through a great lot of higher and lower. Because most of the time you're going to wake up and it's going to be just a little higher. But then there's the day when it's a whole lot lower. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Cakestat's Tiger Forex Report. Teddy Cakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we get back, that saying about running up the flagpole, I vaguely remember now where I heard it first, and that was in high school in the statistics class, because the idea back then was where I grew up, which was in the Midwest, was that Peoria was the most average city in America for earnings and diversity and college education, that you could go there and actually make a fairly good survey and find out a lot of stuff that would be pretty much applicable to the rest of the country. So that used to be it, run it up the flagpole and see if anybody salutes in Peoria. But pretty much anywhere in the Midwest, they would do a lot of surveys. They don't tend to do a lot of surveys on the coast because those tend to be skewed quite heavily one way or the other. But yeah, a lot of people brought up Peoria. I actually drove through Peoria one week. Just a couple hours, but it felt like a month. But what can you say? 877-927-6648. I'm sure all the people that live there love it, but you probably had to grow up there to do that. I was never much a fan of Illinois. Too cold for me. The winters of 1979 and 1980 ruined me for all cold weather for the rest of my life, because it was about 2 weeks in January where it was minus, I think that a high got about minus 10 or minus 12. And then that was like for 2 weeks. And then it happened again in 1980. I can remember going to the lake, and this lake was about, I'm going to say about half a mile wide, maybe longer, and watching people drive cars over the thing. And this is in the lower Midwest. I mean, almost darn near to Arkansas. And you don't really get that kind of bitterly cold weather. I mean, you may get it 1 or 2 days, but weeks at a time. I think it actually lasted like 20 days. And one time it was minus 25. I mean, you kind of think maybe up in the Northwest, maybe in Canada, where they deserve it, that it gets that cold. But man, all I can remember is sitting under a heat lamp in the basement, listening to Jimmy Buffett songs saying, if I can ever do it, I'm getting out of here. I grew up in Hawaii. I hate this cold. I'm going south. Whatever it takes. Flagpole said. Anyway, we'll get to the market here now. And anyway, we're off, 10 points on the S&P cash. Just kind of playing around here, which is interesting. Options have not pushed higher on the day. At least they didn't from right when the show started. So we'll see if anything else changes. I thought that they'd push this market down. We might get to somewhere in the mid 3,800s in the S&P cash before we find a low. But it looks to me like they really tried to push it higher and sell more calls today, which generally is a bearish sign. So maybe they just think we go and sell off into the Fed meeting. Maybe they're afraid of more bad numbers on Friday. But I still don't see anything that says that we've come anywhere close to making a low through the 16th. And it may take the Fed to wash out all the cheery, happy talk that probably won't be around much next year. You know, if you grow up in that, it's different. If you grow up in the cold, I grew up in Hawaii. You know, we had heat twice a year, and we opened the oven. There was no central heat in the houses. You had 2 days where it was cold. They'd open up the oven, they'd turn it on, and that was it. That was your heater in the house. Every day, it rained at noon for 5 minutes, and that was it. I think we had one hurricane in 10 years that I was there. That I think it was in 1963, and of course, I was way too young to remember any of it at the time. I think it was a tsunami. May not even been a hurricane. But, what can you say? So we'll take a look at some of these other stocks today. I had one stock that I was long. I stopped out yesterday, and that was in the longer-term newsletter, thinking that one would outperform. But it did very well over the last week. But I mean, I don't know what it was, a 1% loss or something. But what can you say? I don't know if there's much of anything you can hang your hat on right now. 877-927-6648. We'll go back and look at the volume real quick. 6.45 million shares, billion shares on the CBOE volume. But that's kind of it. Well, let's go ahead and start looking at some charts. Had somebody talk about Ultra. I remember going into earnings, everybody had talked about shorting this. I had said that I continue to see, because I probably go by the strip mall where this Ultra Salon is a couple times a week, and the parking lot's always full. They got some other places next to it, but I think those places do business later in the night. I think one's a bar and one's a vape shop. They're not real busy during the day, but this Ultra Salon packs out the strip mall. You do have kind of a big, wide-ranging bar today, and you don't have much in the way of volume. See, you actually broke the previous high out here, 451.30. That had 1.2 million shares on September 12th. You break through that with basically the same volume, 1.2 billion shares on the 30th. So that's it. You do have pretty good energy on the way up, though, from the October 24th low. Today, very light volume, about 400,000 shares. So, yeah, could it be this as good as it gets? Well, certainly if you're bearish. The only thing I do like the upside on this. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 days above the 3x3. Again, I'd like to see maybe a couple of days below it, a couple of days above it, and then the next move below it, I think, is where the big move would be. But if you're short now, I don't know if there's a lot of risk to the upside in the last couple of weeks of the year. Okay. Question about Micron. I think we talked about this last year. Could be. Again, I'm not bullish on much of anything. I think we could have a lot of just drip, drip, drip into the Fed news, and maybe the Fed is good enough to actually wash out and get maybe some short positions that could squeeze into the 25th, but that's about it. Anyway, Micron continues to move down slowly. Still the bell of the ball, i.e. the ball bearings of the semiconductors. And I've had a couple of people ask me why I keep saying that. I will answer that question when we return.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And, I hadn't done history yet, so we need to do that because it is a special history day.
Then it's all just a little bit of history repeating.
And all I got to do is find what I was looking for now because I had to move to play that. Is it in here? There it is. But, of course, today is a special day.
Mr. Vice President, Mr. Speaker, members of the Senate, of the House of Representatives, yesterday, December 7th, 1941, a date which will live in infamy, the United States of America was suddenly and deliberately attacked by naval and air forces of the Empire of Japan.
And kind of ties into why I always talk about Micron as being the ball bearing. In the Second World War, there was a town called Schweinfurt, and it was famous in all of Europe because it made ball bearings like no other. It had a great steel manufacturing plant, and at the time, see if I hear, Germany, the German aviation, just in planes, used 2.4 million ball bearings a month, and the production was concentrated in Schweinfurt. Well, somebody had a bright idea, and that was that they would bomb Schweinfurt back to the Stone Age and therefore cut out all ability for them to make additional motors, airplanes, ball bearings, anything else. And that would be it. Ball bearings was the key. Well, it was heavily defended too. And over 2 different raids, I think they lost some 200 some odd B-17s out of 1,000. It's like 1 out of 5. I think some 200 or 300 dead, maybe more. I remember it was just horrible. I should have gone back and looked at it. But that was the summer of 1943. They didn't, after the second raid, losing another just ton of B-17s. They decided not quite go back there. After the Second World War, they did kind of doing a post-mortem on the war. Went and found out that really they didn't hit much of anything at the incredibly high price of, as they like to say in war, blood and treasure. But that was it. Anyway, the saying now has always been that if there's a key part to any kind of industry, what is it? What is the ball bearings of a particular industry? And for semiconductors, it's memory. Because literally, if you don't have that, you're probably not doing anything else. It tends to have probably the most defined specification for anything, because you tend to not build anything if you can't get memory from several sources. So memory tends to go through a lot of standardization for types. Now, you can still make it better, faster, maybe a version of it, but there's going to be some kind of standards that says, well, this memory will work at this speed and will do these things and it accepts these commands. There's a whole kind of like finding out, like the sewers of France, when you go over there to the, what is that? The Eiffel Tower. Right next to it is the tour for the sewers of all of the city. And I thought it was kind of interesting, but there's always that kind of infrastructure that a lot of people don't pay attention to until you write a play and get kind of stuck going to it because your girlfriend drags you there. And then you have to watch Les Miserables. But I do digress. Anyway, the reason I bring up Micron so much is it is one of the few pure play ball bearings, and that is memory in the semiconductor space, and why it probably is the canary in the coal mine, so much stuff going on. 877-927-6648. Okay. Somebody posted something about Apple here. I hadn't looked at it much today, and we'll see. I still suspect that there is this double gap at about 138. That's probably where this is headed, even in the short term. That would break the previous low on November 29th. 111 million shares that day. You only have 43, so you're coming back into it. But like I said, I think why it may take a couple more days to find that mid 3800s on the S&P cash. I think we're probably going to get it maybe this week. There may be a lot of playing back and forth as we're getting today. Okay, question about the XLE. Again, let me hit it here. Again, how much do we talk about energy? And, of course, we've got a temporary flood That flood will go away probably in about 2 months. So there is a ton of energy hitting the marketplace. Not enough natural gas, not enough other stuff to make energy for homes and that kind of stuff, enough to transfer things around, diesel, gasoline, maybe some of the other distillates of the rest. And of course, those are being sent around the world. But Russia has dumped a bunch. And some prices, at least some people are saying that Russia is selling a barrel for $60 a barrel to try to get a lot of cash in right now, as they tend to be fairly broke by the war, and they need a lot of cash right now. So maybe that continues on. Hard to tell, but anything can happen any day, especially in a war. Okay, so what else do we have here? Question about the IBB. You did break the previous highs. You did so on just slightly more volume. You had about 2.4 million shares as you broke the August 11th high at 134.89. You had about 2.6 million shares on the 30th of November. You had 2 million shares on the 1st. You had 2.9 million shares on the biotech. But again, same kind of thing. You went up, did close above it, but it didn't take much to drive it back down. Support probably about 131 in the biotechs. And maybe we on light volume, like I said, maybe we find some kind of low as we slowly kind of bleed off into the Fed next week. Okay. Question about MUX, M-U-X. We looked at this last year a lot. And McEwen Mining. It finally kind of came off the lows. It is in a reverse split. I don't tend to play reverse splits. They have about a 90% chance of going bankrupt. Maybe this is the 1 out of 10 that doesn't. I just think that there's probably better out there. And again, this may just be a lot of a bounce, being over short. But I don't know. I haven't talked to Tom about it, but I bet there's probably better stuff out there. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And we come back. Oh, that was quick. Zach brings up what do I think about C3 AI. And if you're unfamiliar with this company, it's an artificial software company in North America, Europe, East, anyway, it helps enterprises expand and deploy artificial intelligence algorithms. Here's the thing. In 2015, I started taking my first courses in artificial intelligence, which I hate the name because it's not artificial intelligence. Some people call it machine learning. I think that's far more accurate. There is no intelligence to AI. It is an algorithm that applies statistical inference to the data underneath it. And it may try a lot of different combinations that humans can't easily see. So it doesn't tend to work very much like humans think. Now, I thought, well, someone's going to come up with something and they're going to be able to leverage it. Well, the first problem with any algorithm is it's not patentable. It's really not trademarkable to most extent, and it certainly isn't copyrightable. An algorithm that is published or one that's been re-engineered or de-engineered has about no worth in today's market. This kind of all started as a fallout to the clone wars of 1980s with Compact and some of these others, making BIOSes that are compatible with also MS-DOS type PCs. And Dell and Compact and a lot of those guys went through those lawsuits. They did it in a way where they had two offices, one across the street from the other. The people were not allowed to talk to each other, fraternize, go out, or even bump into each other, or talk to each other, or date each other. So you have two big software divisions, one on one side, one on the other. The one would document how everything was supposed to work, including how fast it was supposed to work. On the other side, people were supposed to write it, and they were supposed to write it to that spec and test that it would work. And one side would flip it to the other side would flip it to the other one. But the people writing the code never got to see, theoretically, the code that actually ran on the other side of the street. And that's called basically a clean room version of de-engineering another product. It went all the way to the Supreme Court and won. So can you take it letter for letter? No. But even if you just change it minorly, the courts have not looked on algorithms as being wildly patentable, trademarkable, or even copyrightable for the most part. There are some exceptions to that, but I think everybody's smart enough to know to change it just enough, write it in a different language, do something different, and that's it. So for machine learning, guess what? 96% of all the algorithms in machine learning come from college PhDs in the field. They publish it in white papers, and once that's done, there's no way to put the genie back in the bottle. Now, most of the funding came from companies like Facebook, Google, Microsoft, and others, and they wanted specific machine learning algorithms for what they do, which is like Amazon wanted to know, I need an algorithm that says or predicts what people are going to buy based on what they used to buy. For Google, they wanted to know how to make better learning algorithms about what people actually clicked on for a Google search. Or people, will watch this on YouTube. What would I want to recommend next? So they watch something else, and we get to run one more horrible commercial on them. So the problem is twofold. One, especially for using machine learning in stocks and forecasting, no one's really thrown a lot of money at PhDs to actually do this that is open source. So maybe they've done some of this on Wall Street, but no one's talking. And if you're a computer programmer with a PhD in physics, you walk out making $500,000 a year. You're probably not going to want to screw that up. So there are people doing that kind of stuff. We just don't hear about it. It's not public, and you don't find out about it. But all the companies I looked at early on that were trying to become fairly public about machine learning, they've all kind of have this kind of pattern, and that is that they just slowly go out of business. There isn't an easy way to make money at it. And as we talked about Salesforce, kind of dropping the chalupa. What is that? Salesforce CRM, right? You have a problem with those guys. They've broken the lows. They've done so with volume. They tried to compete on software instead on price per hour of a server. Microsoft, Google, Amazon, they all compete on that. Salesforce said, we're going to make very specific software, and we're going to compete not on price, but on that we're doing something special. Well, every big company now has just become bigger and bigger and bought smaller companies, and you can't compete. They're at such a scale that all they care about, same thing as General Motors. I want to buy this knob from you for the air conditioning unit, but I'm going to try to beat you to death until you give me 1 cent lower on the price of this knob, or a nickel lower on this, or anything else. So, that's kind of been it. The big guys that can use huge amounts of technology, all they see is that we're going to need 1 million of these. If I save a penny on it, that's $1 million, a little $100,000. But if I can save $1 on it, an hour, and I got 100,000 people, that's $100,000 an hour. So you can see the same reason that most of these big companies will use something like Linux for their servers. Is it that big a deal? It isn't on smaller companies, so they'll use Microsoft products or maybe Oracle. But when it gets to big, huge things of scale, all they think about is saving the next dime or nickel or quarter, maybe even $1. But for the most part, they are the giant, what would you call them? The giant grocery stores that are offering or moving, I wouldn't say that, that are operating on 6%, 7%, 8% margins. They are the grocery store. So when they screw up, it's easy to go broke. So they're always fighting for the next nickel, dime. And that's the problem with Salesforce or any of these other AI companies. They got to make something that, one, they can protect, and two, someone won't just write another version of the thing slightly different and cut them out. We'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back ready to wrap up another show, I have a question about Algoma Steel. Algoma? I guess that's how it's pronounced. It does look like it's coming back in. We're only 23 days away from the end of the year. Very hard to find a lot of people wanting to dive into a stock in the last couple of weeks. Sometimes you get people buying the last couple of days of the year. Ideally, if you wanted to buy this, it doesn't look bad. I would have liked to seen the energy off that $7.50 high around the 1st of November to bend a little bit lighter volume on the way back down. You do have a nice light volume candle for today, back into the low of the November 28th. That doesn't mean it's going higher, though. Resistance is going to be about $8. $7, at that big gap lower. So, for risk reward going into the end of the year, hard for me to get too excited right now for something that isn't on the tip of everybody's tongue. Maybe it's got super high short interest or something. I didn't get a chance to look. But generally these things, if they're going to do well, probably going to do well the 3rd of January, not the rest of the year. I said it the other day, and that is I don't think CRM does any better until they get rid of Benioff. Benioff? I think that's his name. I think, he got rid of 2 other guys, so the blame's all his now if he can't turn things around in the first quarter. But I have a feeling in the end he's going to be looked at kind of the same way that the previous CEO of Microsoft, before we had the current one come in, and that is a lot of people talked him up, but he never really delivered. We're going to that. Basil is sitting in for Tom O'Brien for the next hour, so hang on for that. And, of course, sell when you can, not when you have to.
Building wealth trading in the stock market seems